Good afternoon. I hope you all had a quick bite, a restful walk break. Welcome to the panel discussion on financing upstream projects for domestic energy security. So my job really is just to tell you what this is about. Energy security becoming very central, as you've heard throughout the day, in the conversation, particularly with global demand for energy surging and geopolitical complexity intensifying as the foundation that supports growth, industrialization, and stability across economies and societies. Africa also has to do the right thing by putting energy security first, particularly as the debate grows and also grows in complexity in terms of who's on the right side of history in the direction that they're going. So with financing of strategic projects to maintain security of supply for the African continent being the main challenge, this session will of course explore solutions that answer Africa's energy security needs. And I'd like to invite on the stage the moderator, Laura Sima. She's Director, Research and Analytics, S&P Global Commodity Insights. The panelists are, according to no particular order, Matthieu Milandri, Head of Upstream Finance at Trafigura, as well as Eleanor Adaralegbe, CFO, Seplat Energy, Edward During, CFO, Lekoil, Bolaji Ogundare, Group Executive Director, Pan Ocean of the Newcross companies. And of course, we also like to welcome Fiyinfolu, Okedare, Director, Consulting Services, Forvis, Mazars. So shall I leave it then to you?
Perfect.
Laura?
Thank you.
Oh, there you go.
I hope you can hear us well, and I hope everyone had a good lunch. And thank you for joining us. It's a busy agenda. So we have 45 minutes to cover something that's quite critical for Africa. So hopefully we'll navigate through all challenges in time. Africa is endowed with abundant hydrocarbons, critical minerals, also huge potential for solar and wind. Nevertheless, Africa today accounts for less than 5% of global refined products demand. It's the continent with the least power use across the world. We've heard earlier, 600 million people without access to power, over 900 million people without access to clean cooking. At the same time, the continent contributes less than 5% to the energy-related emissions, despite being home to 19% of the population. So a few interesting challenges there, and really the core of this conundrum is financing. So how do we bridge this gap? And hopefully we are here today to answer the question of how operators can really secure the capital needed to develop African projects for the African people. So I'm joined here today by an exceptional panel representing the finance and the industry at the same time. We have the trading represented as well. So welcome. Thank you for joining us today.
Thank you,
Laura. So I'll start by saying that we notice a change in tone over the last 18 months, a couple of years, where the energy transition becomes is at the forefront of every energy conversation. So I wanted to hear from you. What's energy security in Africa for you, and is it achievable? Please let us know in a couple of words. We want to hear from each panelist.
Sure.
Do you want to give it a go?
Okay.
Thank you.
No, it's true that the mood has changed a lot over the past 2 years or 3 years, from energy transition to energy security. So it's no longer offensive to say that we are in oil and gas, which is a good thing. Financing should really be split between equity and debt finance. I think it's fair to say that debt finance is easier than it used to be. The traders are playing a big role, but the banks that are still active in the space are also very open for business for most of them. The equity part is more difficult, where a lot of projects are struggling to raise a significant amount of equity. And clearly, it's a big difference between these two markets. But Africa has the resources. You said it is very small in terms of emissions. It has the resources, it has the talents in most countries. It can have access to the technology, either in-house or through the service providers. We are doing, we the traders and the finance industry in general, we are doing what we can on the debt financing side. The greenfield projects are struggling a bit more because of the lack of equity. And the regulators have a key role to play in terms of providing a stable environment for people to invest, and really for that equity money to come in and know what it's walking into.
Perfect. And I think I've heard optimism. Do you think the continent can reach energy security?
It can, but it will require a substantial amount of capital coming in. When we see how much money is being spent just in the Permian Basin in the US, that is producing about 10 million barrels a day, versus how much capital goes into Africa. If you leave aside the very large developments like Namibia, there is a lot of room to do better, for sure.
Perfect, thank you. Eleanor?
I agree, it's possible. I think the key thing, just like Matthieu said, the issue is not with the reserves or the resource in Africa. If you think about Nigeria specifically, we have about 37 billion barrels of oil and about 210 TCF of gas, so a very rich gas nation. So there's never been an issue about the resource or the reserves in the ground. It's really about primarily infrastructure and then financing. So those are the two key things that need to be delivered. And that's why, for us at Seplat, we've largely demonstrated that it's possible to deliver in this space and focus on energy security. In fact, our mission statement is around that. It's really about accessible energy, affordable energy. It needs to be reliable, and it needs to be delivered in a sustainable way. And that's sort of the mantra of our company. It's not just a policy or something that we discuss in an abstract way. It's really about, what our company is about. And so that's why we focus on gas. Nigeria is a rich gas nation. And so that's why a lot of what we do in our strategies are really about gas, because gas is what underpins power. It underpins clean cooking. It underpins access to energy. And so that's really what's going to be important for companies like us. And I think is to demystify the point that it's not possible. It is, because companies like ours have demonstrated that it is. Yes, we're a 14-year-old company, but demonstrated that, look, this is what the country needs. We need to get the light switched on. We need to support industrialization. And working in Nigeria, we've said in our company that we will support Nigeria to actually deliver this. So look, many opportunities, and hopefully we'll have enough time today to really talk about our story and what we've done that has given us the ability to actually be on a panel like this and talk about the fact that we're one of the contributors to the country's energy security. Thank you.
Perfect. So we have two yeses following with a but around capital there. Edward,
well, you're gonna
which side are you?
I'm definitely aligned with my colleagues here. Africa has everything, really. It has the demand, obviously 600 plus million people without proper energy of some sort or the other. So definitely there's demand there, there's supply. The resources are significant. We're having sessions yesterday and today where it's talk about how much gas is all over the place. Forget about in Nigeria, but you go to Mozambique, etc. The issue there is the time it takes to develop that gas and get it online. It takes much longer than, say, oil. If you discovered oil, you can get it to production much quicker. The main problem, technology, people, even if you don't have something, you can always buy it, if you have the money. The main problem is capital and is timing as well of the capital. And I think that's going to be the big question mark, whether Africa can attract the capital that it needs. for fossil fuel type development. And as it does it as well, it has to be sure that not to fall behind on sustainable energy. So as it tries to develop the resources it has now on the upstream side, it has to make sure things like gas, transition fuels are developed at the same time. So it's possible, but it will take a long time.
Perfect. Different nuance there with 2 more bidders. Do you go higher, lower?
Unfortunately, you're going to get a yes from me as well. And I'll tell you why it's a yes. I'm looking at this from a different angle, and this is from the view of an operator who is on the ground. And I look at the things that I think are important for energy security into the future. First, I'm going to look at one bucket, which is infrastructure challenges, which both from finance infrastructure in terms of securitization of infrastructures, and this is probably more specific to Nigeria, where infrastructure security is important for energy security delivery. The other one, which is also very important, is policy, consistent policies that guide the growth of the industry. Policies can't change every 4 years. We need to ensure that policies are in place and policies are implemented, and it is then that consistent investing and probably preferably financing would follow those policies to go into the right jurisdictions. And I think that is, a year of a consistent policy is not enough for an international finance organization to make a key determinant. They're going to look at consistency over years before they bring in that money. And I think that is really important that as policymakers sit down, they look at the duration in which that policy is in place to encourage investment. And with that, of course, comes the last one, which is financing, that we are going to talk about, because there's clearly a big part of financing that we need to unlock in terms of ensuring security. One key thing when I come back to policy is that I always say that the policies that support infrastructures cannot be the same policies that support exploration and production. And the reason is because even from an investment standpoint, the return on the investment on infrastructures that help to move products are not as high as the return that you get from drilling a well. So you really technically cannot borrow the money for an exploration well to lay a pipeline that will deliver gas to an underprivileged area that you want to ensure there's energy sustainability for all. So those are kind of the areas that I would say that one has to solve. But interestingly, these are things that we have always looked at as an organization at Panellists and Newcross. We've invested significantly. When I look at Nigeria as probably the last major trunk line that was done in Nigeria was the Trafigura line, which moved oil for a long period of time. Our organization saw the fact that Trafigura has been in place for over 50 years, transporting majority of the crude onshore Nigeria, and we decided to play a role in developing an infrastructure line, which is the Amokpe-Escravos pipeline, which essentially is a subsurface line buried, securitized in some way because we've buried it about 30 meters below surface, significant cost. So you cannot use a traditional financing model to do that. And these are the kind of innovative things that we need to do to ensure energy security is something that is sustainable for generations to come.
And we'll come back to many of these aspects you've raised around government's role and infrastructure. I think it's key. FO, it's absolutely unfair. You have to go first. It will be hard to find another answer.
All right, so I'll be speaking from the part of innovation and technology. If we look back at 5-10 years ago, we were not where we are now when we look at it from technology, artificial intelligence, and how even innovation can assist us in energy security. From where I stand as a consultant, we've seen organizations that implement technology or tools. For example, we have SCADA. We also have oil and gas insights that assist in actually tracking the security of your crude as it's been moved across your infrastructure. So looking at it from innovation, technology, and what artificial intelligence is doing for us now, all of us in this room knows that artificial intelligence is not just a buzzword again. It is what is utilized across different sectors, including energy that we are talking about. So from capacitation of your staff, ensuring that these tools are deployed appropriately, you are sure that energy security can actually get better, and we can boast that energy security can be achieved. Thank you.
So both a higher user of energy, but also an enabler of energy security. Interesting angle. Let's move shortly, probably for 5-7 minutes, and discuss about financing options. You've all used in your projects different options. I was wondering, Edward, do you want to share a few views on the main financing options that are currently used to develop upstream projects, and then we'll go for some specifics to other panelists.
Okay, yeah, I mean, this is, everything goes, really. Certain companies have skill sets or strengths in particular areas. For example, the IOCs, and even to some extent now Seplat, etc., actually have their own cash. You know, the best form of financing is your own, the organically grown cash. If you have that, problem solved. But unfortunately, if you're not an IOC or getting there, it's very difficult to have your own cash. So you have to go to other means. Now, for lots of African companies, you got things like concessional finance, which is low interest type finance. It's stuff you get from people like World Bank, African Development Bank. You could have those. You also have what some people are using, blended finance, which is a combination of the concessional finance and private investments. And then obviously you have private investments as well, which people use. And then you can, if you get creative and governments are helping you, you can get to things like sovereign funds, etc., to get more of your funding. But on the ground, if you have production, if your development is production, you're already producing, it's very easy to get funding from any source, banks, etc. But immediately you stray away, going towards things like exploration, it gets very difficult because no one wants to put the money in. Like 10 years ago when, or slightly more, when my company was formed, they were able to get $50 million from the stock market and use all of that on exploration. I don't think that's feasible or possible these days. They're looking for immediate returns, short-term returns, which you don't get with exploration, etc. So there are a number of ways, but the part that the government has to play is significant because, firstly, we're moving towards having regional banks or African banks, whatever, because 2 years ago, when the whole world sneezed, we all caught a cold. When we were saying you cannot no longer have fossil fuel, and because of that, all the funding avenues in the US, etc., were all shut down. Now administration changed in the US, and now it's deal, baby deal, and suddenly things are opening up again. So you have to get in quickly before there's another change, or at least build your own in Africa, because you will be going with the flow. So very, very quickly, you probably have another, 3 years to get all the funding that you need. So act fast.
So you need to act quickly. I've heard a CEO of one of the majors, an ex-CEO, saying a few years ago exactly on that: grow demand, grow supply, go down on supply, saying it's like being in the middle of an ocean in a boat. Swim left, swim right, and actually governments don't realize that you stay in the same spot. You don't move much in any direction. So hopefully that inertia will find ways to discuss how to cut the inertia. I wanted to go to Eleanor next. You've successfully mixed some of these financing options. Tell us about that success and the conditions that enabled that possibility.
Yeah, thank you very much. In fact, when Edward was speaking, I was thinking actually there's a way to still do exploration without going to the banks or the traders. And I'll get into that in a little bit. But yeah, no, thank you. I think Seplat's story is a really great one. I mean, we took the assets from Shell, divested the assets from Shell back in 2010, and worked those assets, and after a few years, we listed as a company. So we had some small debt that we got from some banks at the time. But when we listed and raised over $500 million from the market, that sort of set the stage for us for a lot of our development. And then subsequent to that time, we then had access to banks as well. So Edward is right. It's really about everything goes. You need a stack of different options in financing. So we have equity. We had the bank debts earlier in 2015. We had a revolver credit facility. But when the market started to see the stability that Seplat was bringing to the table, we then found ourselves in a place where people started to trust us because of how we delivered. We were disciplined. Yes, there were issues with routes to market at the time. I mean, there was a time we were only evacuating via one evacuation route, the Trafigura pipeline. And so what you find, because debt is expensive in Africa generally, what you find is that once the banks and the investors can see that you're thinking like they think, which is, what is the sustainability piece of this? They want to make sure that you are thinking about stable production. You need multiple routes to market. You need diversification. You need to demonstrate that you are reliable. You have to be, provide information. You have to give updates to what you're doing. So we built that discipline. There was also the focus on cost as well. You have to actually build a track record for people to notice you. And I think that's the story Seplat has today, which is that track record has been built. There's a mantra, there's a way we work, and the way we work is what has provided that success. So it's the right leadership, it's the right partnership, engagements with the government, reminding us that, look, NNPC is the major JV partner. So there are a lot of engagements that you need to do in country. And I think from my perspective, it's really the message is it's possible to do this right. Despite a lot of the news we get about Nigeria, we're a company that has demonstrated that it's possible to deliver value, to grow assets, and have multiple financing. In fact, over the past sort of 12 years, we've raised over $4 billion in debt. We've paid back 75% of that, and we've done bonds, we've done the RCFs, which have been sort of the major enablers for us. In fact, we have the RCFs, we're not fully drawn on them. We use them to sort of support acquisitions. We've had 2 major acquisitions that we used the RCF to deliver. So, I guess in summary, it's about delivering on promise, do what you said you're gonna do. Look at asset diversification, very key. You can support things like exploration from your cash flow from operations if you have raised funds for, your brownfield development. But you get to a point, like Edward said, after you've developed that track record, you get to a point where you can then use your cash flow from operations really to do other things, to do inorganic growth or to do more exploration, seismic and all of that. But look, resources great on the ground, so the opportunities are there. We have the right enabling environments. There's PIA. There are things that enable you, to get support. And so now the banks are all over us, if I may say that.
So you have too many amazing. For the independents in the room that aspire to become the Seplat of tomorrow, how long does it take to achieve that brilliant track record?
So I'll leave you with 3 words: governance, discipline. Start small, right? Watch the business grow. I mean, you may not be able to get, a bond, for instance. I mean, our debut bond in 2018, we were probably the first Nigerian company to have a bond on the international market, which is a big deal. When we refinanced that bond just this year, we priced within the sovereign. So a lot of people didn't know us until recently. Right? So it's just about starting small. It may be that you'd have to go to traders like my neighbor here, to start off with that. I mean, you would have to look for, maybe project finance, maybe a bit expensive. But once you deliver on the promise to your stakeholders, your banks or your investors, then, you just gradually grow. And then you become, obviously we had a lot of support from the government. Great management team, great shareholders. So, many things have supported our progress. Thank you.
Perfect, that's great. Time is running, and I've had a few more questions. I'll probably go to Edward after he has a sip of water, to tell us more about green sustainable finance. I think you had some interesting examples there about showing that mindset in the energy sector, that you care about the environment, that you care about the communities around the project. Tell us more.
Yeah, I think, just because of time, one example I can give is flaring of gas. In most countries still flare a lot of gas. And obviously this is very bad for the environment. In Nigeria, for example, there are many ways, you got the things like carbon credits that you could get from getting rid of this, but there's a huge penalty in Nigeria at the moment for flaring of gas. It's been significantly increased. And what you basically, it incentivizes you to actually trigger projects, for example, move to transition fuels like LNG project, so you can take your gas, convert it to LNG. Not only do you make money on the LNG side, but you actually reduce or could completely remove the penalties that you will get. And obviously you can tell a very good story about stopping the flaring, etc. So that's basically whatever you can do to monetize your losses or monetize whatever costs you have, that's always a good one. And obviously there are lots of green type financing that you can go for as well. These days, things like ESG are key to even doing normal business. You need to demonstrate that you are making some kind of effort. You have plans towards ESG. Otherwise, you don't tick that box, then most likely you will not be able to even raise finance for other things. So it's really general. Again, there are lots of things available in the market.
Can I just quickly add?
Absolutely.
The point around, from the financing side, I mean, the banks and the financial institutions are also keen on gas as a transition fuel. So for us, for instance, we are ending routine flaring on our onshore business in 2025. These are projects we started a while ago. So you still get support, on finance, and even if they're institutions that are sort of ESG focused, as long as they see your track record and your progress to things around ending routine flaring, and then gas being major projects for you, you get support as well. So it's another opportunity to get more finance in that way.
And I think, Bolaji, you were talking about credits, I think. Could you add something on that? And more specifically, what financing options worked for you as an indigenous company?
Okay, no, absolutely. Thank you very much. And I think just to add to what Ed was saying, first of all, I like to always clarify to people that credits from either carbon emission reduction or upstream emission reduction credits are not pre-money. So you do not get that money to actually help you develop the project. You earn those credits and they are post-money, which means you still need some form of bridge during the period when you're implementing that project. Because a lot of people make that mistake that I want carbon credit money to build my pipe. It doesn't happen that way. But what is important is it should be something that should be considered, especially when you have projects, just like Ed said, where you're either ending routine flaring of fugitive gases. So in those scenarios, and most of which is associated with gases that come from our upstream operations, if you're able to develop projects whereby the return or the profitability or the positivity of that project would otherwise be negative, economically negative, then the credits come in to help you make sure that project becomes feasible. And that does happen. I've been involved with at least 3 projects, starting from Vattenfall project under the old Japanese, under the Kyoto Protocol. I've done that as far back as 1987, 88. No, sorry. 97, 98, I'm not that old, sorry. So I've done that as far back as then. And recently, companies like Platform Newcross Petroleum have benefited significantly from upstream emission credits. And most recently, Energia, which is also a Nigerian company. And I'm speaking credits that are northwards of $30 million that are able to help you implement some form of your project. But in addition to me using some of these options in my project, one key thing that I've clearly you cannot avoid traditional bank financing. You just need to be sure that you've done your homework well. A lot of times people will take a corporate loan instead of a project loan. So, and the processes are a bit different. If you go for a project loan, it's a lot more diligent. Eventually you'll get it. It's a lot more patient. If you take a corporate loan, most of the time there's even no grace period on this. And people think they can quickly implement a project and you run into challenges with this. So this is something that you also have to do your homework on, clearly. But some which have tried to optimize a lot more are production-based financing, which I'm able to work holistically with the trading companies that we work with to develop models whereby we can look at production profiles, and on the back of that, they're able to support you towards increasing your positivity in terms of your production. So this, and also contractor-based financing. I think, at least for my organization, the days are gone where I would simply write you a $10 check and tell you, go do this for me. No, I'm gonna sit down with you and make sure somewhere in that equation you have a stake in what I'm doing. So you're incentivized to deliver that project on time and on schedule. And clearly I make sure rewards are built in for you on the back end. I've found that this helps me to bring long-term local relationships with companies that exist in Nigeria, whereby they feel that they are a key part of success and essentially helping towards building that energy security that I want to look at everybody that works for me as a partner. Thank you.
And I think we can shift and discuss about the role of the government. And I'll probably go to FO next on the role of the regulator, right? Exactly what you are saying. You need to respect schedules. You need to have the right enablers, incentives, carrot and stick in place. What should the regulator do to ensure?
All right, so first things first. The regulator cannot take all your issues away. Let's get that right. But they can help in bits and in pieces. First, no investor loves surprises when it comes to policies that are available, whether financial policies, economic policies, or even for the infrastructure and even land that you are going to work on. So get all the stakeholders together. Getting them together, allowing them to be part of the discourse when forming these policies is quite critical. And then looking at it from the finance point of view, we've talked a lot about that. But ensuring that there is appropriate hedging, appropriate market information, demand and supply of those that needs the funds, bringing both parties together, help government and other stakeholders achieve this de-risking whatever finance option each of these stakeholders may want to dwell in.
Perfect, thank you. And I wanted to probably still stay with you for one more question on the infrastructure. Bolaji touched on early in the panel, but in order to ensure Africa's energy security, you need to bring supply closer to demand centers.
Yep.
Who should be in charge of paying for the infrastructure? Is not the most profitable part of the business.
Of course, each investor is always afraid. I'm investing in this, but how soon will I get my return on investment? Is it medium term? Is it long term? If government steps into the equation and assists in allowing the infrastructures to be available, assisting in even building these pipelines, assisting in getting all the stakeholders together, infrastructure, not just the pipelines, energy park, power parks, where stakeholders can actually sit together, commute, and actually do work together in ensuring that energy is available for all stakeholders. Other amenities, is it the road itself? Is it the road? Other amenities, hospitals, healthcare, most importantly also security. Engineers are afraid to go into that field. Government is in charge in ensuring that my life is safe before I do my work. We can't go into details of security, but government should also, in their little way, assist in ensuring that that very good environment where stakeholders and also investors are willing to thrive is available in the market.
Thank you. Edward, anything else you would add on who should build that infrastructure? Any views on that?
Well, I mean, the first thing to realize is it's very expensive to build infrastructure, and it takes a long time. And governments tend to come, 4 years or 5 years, and they change out, and they have different missions. So, I mean, beyond things like private public partnerships, the governments really, I think, need to do much simpler things. For example, policies, regulations that process and time needs to be simplified and shortened. For example, Lekoil had blocks that we farmed into more than 10 years ago, and only quite recently that all the necessary approvals were secured. Now, if you can imagine going to bank or investor, and you don't have all your approvals in place, you're not even 100% sure that you actually own what you say you own. It's very difficult to secure funding for that. So very simple things like that. Corruption is an issue, I think, that needs to be addressed in most of the, or all actually, of the African countries. I mean, I know it exists elsewhere as well, but it's probably more pronounced here. So governments, I think, need to help in that respect. Simple things that don't really cost that much money. Because when you go into infrastructure and all that, it takes a long time. And it does help, because if you start having stuff going across West Africa, for example, I understand Nigeria sells gas to Ghana, and even gives them, the minister was saying a few weeks ago, gives them a good grace period in which to pay. So all those corporations, regional, etc., helps as well. So it's not just anything that I know everyone thinks, let's just get money from the government, or the government needs to spend money, but the government also needs to spend money on other things. There's lots of other social type programs that require money. So we need to solve our own infrastructure issues. And I think we can if things like policies and regulations are kept simple and shortened time-wise.
Sounds good. Thank you. Perhaps we shift to Matthieu. What else should governments do to ensure you finance enough projects, there are enough projects running, and the coffers of the government are filled to the right level where companies are not deterred from that country, right? On top of ease of doing business in the country, there's the fiscal story as well. How do you look at the role of the government here?
What Eleanor said earlier really resonated. I mean, discipline, execution, don't try to run before you can walk. I mean, you can say all of that applies to governments, regulators, and NOCs as well. It's like NOCs can be like any other E&P companies if they execute, if they deliver, don't overpromise, don't have grand plans of 2035 before they take care of 2026. So all of that's possible, but the Seplat example is a great story of how to do it. Getting an IPO done today is probably extraordinarily difficult, but still the process and the discipline remains very relevant in today's world. And the countries that are doing well are those where the regulators are clear, they execute. It doesn't take 3 years to get an approval. You need an FDP approved. You don't need to go through 15 iterations. They work with the various stakeholders as opposed to taking a helicopter view. So it's all about baby steps. Make the small things happen, and then the small things will get bigger and bigger.
Perfect. Thank you for that.
Maybe I can add just in a minute or so. There's a lot of history in Nigeria, and so there's a very crucial role that operators like us have with the engagement of the government parties. Yes, I agree that the government has its place, and for instance, in Nigeria, we've seen in the last 2 years how government stepped in, dealt with the security situation. We've seen an improved uptime on our evacuation routes. So it's, we're on our way to doing things. As the PIA, we're trying to get better fiscal so that we can sort of support foreign direct investment. So as much as I agree that there's quite a bit of government to do, I think we're seeing a lot of progress, certainly in Nigeria. And so we just need to continue to have those engagements, right? and then, obviously offer services. We've seen divestments happen. Obviously for us to see the level of divestments we've seen in the last year or so, about 4 big ones, that is telling you that there's a level of maturity in the country where indigenous players can then pick up the baton and start sort of focusing on developing, the resource that we have in the ground. And so that engagement with the government is helpful. So we have all these not pressure groups, we have, operator groups, OPTS, we have IPPG. These are groups that engage front end with the government. And I think there's a lot of that happening. That needs to happen more, so that the government can also, in partnering with us, can see how much more we can, develop or do. So, yeah, many things. Power is a big one for us. Electricity is a big one. The government has a lot to do there. And some of those projects we're making progress there. So it's work in progress. And I think a good journey so far. A lot more to do, I'd admit. But, I've seen a lot of progress still.
And as you're saying, Nigeria is a mature province. Yeah. A lot of infrastructure, a lot of players, knowledge being shared. But perhaps for frontier countries, it's a very different story, right? Yeah. And there are some learnings, those consultation groups that focus. And also we need to acknowledge that the landscape has changed, right? Operators today are not the ones that we used to have a decade ago on the continent. And they come with different challenges, with different risk appetite as well.
Yeah, and I think we should also tell the difference between the regulator or the country as a regulator, which is obviously that's his role, and the national oil companies, which, historically national oil companies were more like, carried equity owners into the projects, where, international oil companies would operate and they would, quote unquote, enjoy the ride and generate value like this, with the regulator supervising everybody, just not the NOC. The roles are changing when the NOCs want to take a much more active role. And unfortunately, I need to say, so far, few of them have proven to have, indeed, again, the discipline and the execution of making those projects happen. And so there's a big difference between what the NOCs should or can do and what the governments should do to supervise the entire industry of that country.
And all stakeholders. No, that's a great point there, Matthieu. With 5 minutes left, I wanted to hear from each of you something that hasn't been covered yet, right, on what companies should do next. Edward, what would you add on that? For
me, the one thing that I want to everyone should bear this in mind, as the continent looks to solve the energy crisis and the energy issues, we should not fall behind on the renewable and clean energy, because we don't want to get to point 10, 20 years time whereby you suddenly get out of whatever you're doing now and then you realize you are falling behind, just like we did with fossil fuel versus the rest of the world. So I think it's very important for the government to also make sure they utilize most of the clean energy that we have, whether it's wind, solar, hydro, etc., to ensure that that is also progressed with time, alongside trying to get from your fossil energy.
So a more integrated approach, and in time change the mix between traditional resources and newer one in companies' portfolios. Yep. I think I've also heard from you, from your international experience, that companies, despite of the context, the regulation, what the NOC, the regulator are doing, they should put their house in order first.
Of course, just like what Eleanor said, you have to have good corporate governance. You have to do things in a right way, keep your costs under control, just run the business properly, so that way anyone that is looking to invest in you, or if you're going public, you will be attractive. But you have to keep your house in order, and not just your house, but even in the country, you should keep that in order as well.
We haven't discussed much on partnerships. Companies with a different profile, starting in the industry, smaller players do need those. How do you look at partnerships, Bolaji, in probably 1.5 minutes?
I think partnerships work, and it's something that I think my organization has been very successful in making work. I can think as far back as companies like Platform Petroleum, which are a key part of Seplat today. I remember us partnering with them on their first marginal field, and we made that a success. More recently, right next to me here, I have Mr. Lekoil, who we've recently divested 45% of one of our assets to, so that we can jointly collaborate. I think the days when one person just sits down and says, I'm going to sit down on this, develop it all by myself, take all the value, but also take all the risk, is far beyond us. Organizations have to start looking at how E&P companies start collaborating and bringing their best of technologies to apply on both surface and subsurface assets towards development them. That is the outlook that I see for the future. I mean, when you tell me we have 135 E&P companies in Nigeria, I get scared because I'm like, that means each person is building his own asset. It just doesn't make sense. We should be collaborating a lot more, and that is why my organization has consistently looked for partners that we think we have similar purposes, similar core values, then we can both focus on the asset. But what is important now is the purpose and core values, and that drives us towards finding the right partnerships.
And perhaps specialization, right?
Absolutely.
Each company or each stakeholder should stick to what they know best in order to jointly succeed in the industry.
Exactly.
Now that it's been a great conversation having you all here. It will be hard to summarize the conversation, but I think I've heard debt is easier, but on the equity side, companies will still struggle. However, there are positive examples with discipline. Companies can achieve that trust and that experience to sometimes self-finance, perhaps self-finance parts of the value chain that are less interesting. We've heard from Matthieu that discipline should apply to every stakeholder in the industry. It's not just a company issue, governments and regulators. And really the question remains how to decouple a politician's mandate from the needs of these long energy projects, multi-year, multi-decades. So more to follow. Please do not hesitate to engage with the panelists and continue the conversation over the remaining days of the event. But please join me in thanking this exceptional panel today. Thank you.
Thank you very much to our panel. Really do appreciate it. Give them once again a big round of applause.